Apologies for the delayed start. I welcome you to this conference, call organized to discuss our financial results for 9 months fiscal 19. I have with me Sunil Kakkar and Bipin Gimani. Vishal from IDFC AMC has joined us as a special invitee. I would like to state that some of the statements made in today's discussions may be forward-looking in nature and may involve risks and uncertainties. Documents relating to our financial performance have been emailed to all of you. These documents have also been posted on our corporate website. I now invite Sunil to provide key highlights and the way forward.
Thank you, Bimal. Good afternoon, and once again, apologies for the delayed start. So, IDFC Limited, I think from going on, we'll focus more on the strategic direction. The numbers are all there up in the website, and most of the numbers are actually driven by the bank, and the bank has posted its investor relations presentation on the website. But I'm open to all questions pertaining to the bank performance or the merger. But we'll not focus too much on specifically on the numbers. We'll go through it also. The focus, as I mentioned, was to share with you what we have progressed on the strategic directions and the changes thereon. And going forward, the frequency of these calls would also be aligned to the events which take place. And if there is nothing significant in any quarter, we may or may not have a particular call. But hopefully, every quarter we should have something, and so we can continue in that manner. So let's look at the strategic direction of where we are, what we had earlier mentioned we will be doing, and share with you what is the way forward. So we had talked of a project which internally we have been talking about is unlocking value. So strategically what we are now, and we are happy to share that all our strategic decisions have been taken. There is no more any ifs and buts and what if scenario. From the banking perspective, the merger is complete. That's done deal. Our divesting, the focus going forward is to build on retail-oriented business. I formally want to confirm to all our investors and potential investors that going forward, IDFC Limited will focus on A, the growth in the bank, and B, on our asset management company, which is the IDFC AMC. So these are the two businesses we will focus, grow, and build. Other than that, we will divest all the non-retail businesses. And the progress so far on that, I'm happy to confirm, is that we have finalized all counterparties and it's now just a question of entering into various agreements. So specifically, the alternative business of the infrastructure sector of the alternative business has been sold to GIP New York. That's done. The private equity real estate has been sold to InvestCorp. That is also done. The alternative Singapore business, not Singapore business, part of the FOF is also it's in progress. We have identified the counterparty. The infrastructure debt fund, we've already shared with you that the counterparty was the NIIF, and the definitive agreement with them is being signed as we speak. So it's on track. And this Saturday, the board approved the counterparty for the securities business sale as the Chatterjee Group, for which we have also informed the stock exchanges. So all other businesses other than the IDFC Bank and IDFC AMC are on progress for divestment, and hence our strategic shift is complete as we speak. The focus here onwards will be on growing the businesses which we are focusing on, that is the IDFC Bank and IDFC AMC. So what can the shareholders expect in the next 10-12 months, say? See, by the end of calendar 2019, so once the divestment of these businesses plus cash on hand and various other small assets here and there, we will convert that into cash and bring it up to IDFC Ltd. That whole process is just a process. The risks are minimal in that. We can talk about some risk, if any. So by the end of calendar 2019, the divestment of all non-retail businesses, etc., should be complete, and we should be able to transfer about 1,200 odd crores to the shareholders, and through a process which would be tax compliant
and tax efficient.
Please note the words tax compliant and tax efficient. So it could most likely be a combination of a buyback, capital reduction, etc. So many corporate restructuring process will take place. Hence, the timeline of 9-10 months. But as far as fixing the counterparties and ensuring that these deals are crystallized, we are almost there, and the quantum should be around 1,200 odd crores, give or take a few here and there. That's it. So the next 10-12 months, the focus would be on ensuring that the monetization of these assets takes place, and we are able to return to the shareholders an approximate amount of around 1,200 crores. Some amount of dividend which we may receive from the asset management company will also be shared or pushed up as dividends. So we want to complete all of this in this fiscal March, ending March 2020. That is a definite plan. So by that time, the second and the third strategic direction which I may talk about next is more an optionality available. It is not a plan, it is an options available. See, by October 2020, our lock-in of 40% in the bank, that lock-in period completes, 5 years are over. So the lock-in of 5 years of 40% is no longer required. Post that, depending on how the bank's progress is and where it is, the optionality of converting and monetizing some investment in the bank at an appropriate value is also available. What I want to share with you, and I've been trying to do that earlier also, is, but I guess not very successfully because the holdco discount doesn't seem to come down, is that even if we were to monetize some of the bank's value and convert it into cash, and if required, buy back the bank shares again. For you people can buy it, and if you take it, we can buy it for you also. So in effect, we can transfer bank shares to you, and the cost of all this from a tax perspective will be, depending on the value at which the transaction happens, will be not exceeding 8 to 10% of the sale price. So I still cannot understand why the market is still taking more than 40% of the holdco discount, but this is what the market is. So, just to repeat, the optionality to monetize and convert it into bank shares at a price of not exceeding 10% exists post October 2020, and anybody who's interested, we can meet our investor IR department and we can sit down and work the maths along with you. It's an optionality, not that we will exercise it, not that we intend to sell it. The question remains, depending on what the holdco discount prevails at that point in time, and B, how the forward-looking bank's asset value creation is looking like, we will decide at that point in time, which is post-October 2020. the only point being message here is that we have no more lock-in period. The lock-in period expires in October 2020. All of this is subject to assuming that the current rules and regulations continue. Regulatory environment changes, the strategic thinking on what we do with it changes. So the third aspect which is a definite focus area, is on our asset management company. The AMC, we have completed our strategic review and come to a conclusion that it makes a lot more sense given the environment, given the way underpenetrated we are, and I will ask Vishal sometime later to join in and speak about it also. We will continue running the AMC and ensuring that we create significant value in that asset class. Over the 3 years, we expect our asset management to grow significantly. We would like to see our profitability reach a level which makes it an interesting at least 3 to 4 times in the next 3 years. Somewhere we are, given where we are this year, of course, some portion we lost because of the strategic review process. But from next fiscal onward, and Vishal can share that even we are seeing good progress in the month of January, once the finalized decision was taken that we will continue and focus on our growth in the asset management company. Our expectation is that we should be able to increase our profits 3 to 4 times in the next 3-4 years. And after that, whatever is depending on what the environment is, there should be a possibility of monetizing some of that value through OFS, public listing. Those are the various options. But that's at least 3-4 years down the road. So now the current focus is to build the AMC significantly such that the profitability goes up 3x, and that is the focus area, and we will see what we need to do in terms after that point in time. So that is, in conclusion, what we seized in a strategic direction. So what is more near and certain is transfer of almost 1,200 crores to the shareholders in a tax-compliant and a tax-efficient manner over the next 10 to 12 months. So let's take it step at a time. Next 10 to 12 months, that is what we want to do. That is we are planning to do, and that is my goal and objective. Post 12 months, 12 to 24 months, depends on how the bank starts performing, and after that we'll see what kind of monetization, if appropriate. It's an optionality post October 2020. So that's another year down the road if you take it in fiscal years, and 3-4 years down the road is how can, at that point in time, assuming the AMC triples its profitability, if not more, is what do we do to monetize that. That broadly is the 3-year plan which I've just shared with you, and that is how we will, going forward, our focus will be. Just to clarify, just to repeat, the focus is on retail businesses, the businesses being specifically the banking business and the asset management business. I may now invite Vishal, if you can. Vishal is not physically in the room. He is ensuring that the AMC progress continues. So Vishal, can you join in and add a few words and share what we have seen and what we are looking forward to in the AMC?
Sure, Sunil. Am I audible?
Yes, at least to me.
Okay, great. So thanks, Sunil. Thanks for giving the backdrop and inviting me. Good afternoon, everyone. What I thought I could do over the next 5 minutes or so is cover 3 areas. First is just a bit of a backdrop of our AMC and what we're trying to do. The second is the last quarter, both for the industry as well as for us, and what our focus has been. And the third area could be just some forward-looking comments around how we see the coming quarter and how we are positioning ourselves in the AMC for growth in that quarter. So the first one, which is a backdrop on the AMC, many of you had joined the call earlier when we had shared our very clear and succinct strategy on the AMC. It is focused around building sustainable business that creates a value for all our stakeholders, including our shareholders. And in line with that purpose, we have a strategy that looks to ensure that we have the right products which are diversified across asset classes. We also are focusing on expanding our distribution and as well as our resources and capabilities on the ground. And a whole host of investments have been made over FY19 in that direction. So we've also, in addition to expanding our product suite, we've been investing behind our fund management capabilities, technology, salespeople, as well as the sales technology that we use using analytics and website and digital technologies, as well as refurbishing some of our branches, some of our physical infrastructure. So all of that has already been done. We remain committed to the strategy. So the good news is that there's no change in strategy and the team is doing what we set out to do a few months back when the board approved our strategy. In that context, the last quarter has been very interesting, both from a market standpoint as well as the AMC. In the market, the industry overall degrew 3%, and on a non-cash basis, because of the scares in the debt market, a fair amount of the growth actually moved to liquid and cash segments. In the non-cash segment, actually the market degrew 4.1%. I'm happy to report that the AMC held on to its market share on a non-cash basis, which you will all recognize has been our focus and our stated strategy. So in the non-cash segment, we remained at 2.9%, which is the market share that we had as of the end of the last quarter as well. So despite the situation in the market, we held on to our ground. The end of the quarter also had the clarity on the AMC emerging, as Sunil mentioned, with the completion of the strategic review as well as the decision to continue the AMC without any shareholding change. And that allows the team to now go out more aggressively in the future to continue and build our distribution as well as our client franchise. So as we step into January and as we get into the next quarter, what we are seeing is that with a fair amount of the credit issues and credit-related exposures that the industry is seeing, given the fact that your AMC, which is IDFC AMC, has not had and traditionally had a fairly conservative and a high-quality view on credit exposures, we don't have the type of exposures that a large part of the industry seems to be having in the stressed names, which is leading to a fair amount of reallocation of assets as well as a flight to safety. So at this point in time, we are seeing some amount of growth driven through the fact that a lot of our clients are choosing the safety of some of our products and the high quality stance that we've always maintained, and that is giving us a push up in the growth. In addition to that, a lot of our distributors who had earlier put us on hold given the outcome of the strategic review and any potential change in shareholding, they are reactivating with us, and therefore we are getting back on their product list and recommendation list across asset classes. We do have planned to expand our product suite further, including on the non-mutual fund space, that is specifically the hedge fund space. We launched some of the other product gaps that were available in the mutual fund area for specifically on the overnight fund space. So the idea is really to continue to do and execute the strategy that we had laid out, which is around retailization, expanding the client franchise, building a diversified business. And despite the turbulence in the market, we've weathered that part of the quarter very well. And from all of what I'm seeing now, we are very well positioned to grow this quarter. So that in summary is how we are seeing it. We do think that this turbulence may last for some time, but on a relative basis, our products and our positioning actually helps us retain and grow the position that we've built over the many years. With that, Sunil, if I can hand back to you.
Thank you, Vishal. I think that is a very clear direction of where we are focusing. We will now open the session for Q&A. I am open to all questions, including of any questions pertaining to the bank results also. So, open for Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Nischint Chawathe from Kotak Securities. Please go ahead.
Just two questions. First, Sunil, I didn't get the math around, 1,200 crores, that you guided for next 10 to 12 months. How you're going to kind of source this?
So, I would suggest that you meet us and I can walk you through the specific numbers from various, but it all adds up from the sale of various entities, which we are doing, and cash in hand. So if we all add up, it will come to that number, and we are talking about 1,200 odd in the hands of shareholder.
Sure. And when we are saying focus is on AMC, I believe alternatives is not a part of this.
No. It's Vishal's business, which is the AMC. Alternatives is being sold, has been sold already.
Okay. And the other one was for Vishal in terms of, really trying to understand as to, the change in TER norms and how one should be really thinking about its impact, on the business and the sharing that you would have with the distributors.
Right. If I can, Sunil?
Yeah, Vishal, that's for you.
So, I think the general belief in the industry is that the AMC's profit margins are already quite, thin, and therefore the bulk of this further reduction that is coming in April is expected to be passed on to the distributor. Now, having said that, one has to be, I guess, patient to see what actually happens in the first quarter of the next fiscal. And therefore, we are approaching it with being open to all possibilities. The good news, in many ways, from the way our AMC is structured, is that most of our equity funds, which is the area, the segment where the TER reduction actually impacts the most, most of our equity funds are modest in size. So we don't have an outsized fund which has a very large cut. For the benefit of everyone, the way the new regulations play out, the larger your fund, the more the TER hit from the current position. So our impact relative to the industry will be much smaller. But given the fact that there is some impact, I guess we want to see how the market behaves and see how much of this can be absorbed by us versus being passed across to the distribution and the marketing teams. We are budgeting for that as the way we think next year. But I guess next quarter will be a good time to see how this settles in terms of the industry margins.
Sure. And what would be a breakup of IFAs versus national distributors?
So you mean on stock or flow, because both these numbers are very different. But I can't give an exact split because I don't think it's been publicly available. But I think it would be indicatively fair to say that on the stock we are relatively stronger with the higher end clients and the more discerning clients, starting with the top end large clients, family offices, followed by national distributors, followed by IFAs. In terms of flow, a lot of our effort over the last year and going forward will be to grow bigger with the IFAs as well as the middle-level national distributors.
And any sense on the contribution of the proprietary channel? Or the direct channel?
So on a book level, it is more than 50%. But again, we have to keep in mind...
Yeah, just the equity business. No,
equity business is in line with the industry. It's broadly in line with the industry. We are still slightly behind. And we are growing faster because we are behind. So as we invest more into our online capabilities, a lot more clients are coming directly to us.
Great. Thank you very much and all the best.
Thank you.
Thank you. Next question is from the line of Arshad Mukadam from Vibrant Securities. Please go ahead.
Hi, good afternoon. My questions are more pertaining towards the bank. So, firstly, I just want to understand what exactly does stressed equity and security receipts mean?
Security receipts are representing our share of investment. See, when you sell down a stressed asset or a loan to an ARC, In return, depending on when we sold down, things change. You get security receipts. So it is your share of in the pool of stressed assets which has been sold down to ARC. So that is on our books. Now, when we sold down already, we took a 50% cut out there. So to that extent, we believe that the investments shown as security receipts are on fair value.
Okay, but then there are still some amount of stressed security receipts. Now that means we don't expect to recover those.
No, maybe the language is a bit, since this is, there is nothing called stress security receipts, but yeah, because it represents stressed assets, it has been shown under that column. We don't believe that then the word is stressed equity, which you have said. It's shown in that stressed NPIs, for which is also fully provided for, I guess. Yes.
Yeah, fully provided.
So if you will see, it is 220 odd crores, which is, because we are different, giving you a flavor of what is our, loans, equities and investments. That 220 crores is fully provided for. So there's nothing, it can go down further because we are carrying it as
Okay, no problem. And could you also help me understand what stressed equity is exactly?
Okay, loans which were converted, right? Some of it gets converted into equity.
Okay.
Yeah, so that's why we call it. So it is conversion of loan into equity. Since the loan was stressed, the equity automatically is stressed.
Okay. So my next question is more pertaining.
And you will also see, I'm just saying you will also see that it is fully provided for. So to that extent, the number was 1149 and the provision is 1149. And hence, these are being carried at ₹1 value. Okay, next question.
Okay, thanks for that clarification. So then I see we also plan on opening 600 to 700 more branches, say in the next 5 years, I think. Now, obviously that's going to put some stress on our profitability in the next few years. So I just want to understand how long roughly does it take for a branch to break even on average?
2.5 to 3 years.
2.5 to 3 years. Okay, and so in this next 5 to 6 years, we see probably, I think we'd experience some losses, right?
No, we won't get into loss situation. No, there won't be losses because, see, these branches, you can say a reduced P&L, reduced meaning if we had not opened the branches, but then how do you grow? If you don't, the whole focus on retailization is on asset side, definitely changing the mix, which is currently 30% retail and 70% wholesale, to flip it around to 70% retail and 30% wholesale. But the main driver of profitability is, if I may use the old word, CASA, or if I may say retail deposits. And to open the retail deposits, we need to have some physical presence. That has been proven over the last 2.5, 3 years that only digital is a good way of servicing an account. But acquisition of accounts, given our current mindset of all our clients and customers, physical presence is still I would still say a necessity, and hence the pace of growth of these 600 branches is going to be calibrated to see that we do balance profitability and growth. So that's the tightrope which we will have to walk. But the direction is to open branches such that we gather retail deposits which will replace our high-cost funding of wholesale bonds. That's the strategic direction.
No, I completely agree with that strategy. Definitely, that makes sense. But I just really wanted to understand exactly, basically over the last 2-3 quarters, we've had some stress on the bottom line level. So I want to understand when maybe you could start seeing profits flowing to our income statement.
Yeah, you should. You see this last quarter, if you take off the one-off, which is just a accounting entry, we are about 95 5 crores PBT or PAT?
PBT.
PBT, 95 crores.
That will be 100 plus.
And that's a tax write back, so you get 153 odd crores of PAT. But if you take off the tax aspect, because normally you will not get write backs every quarter, so 100 odd crores PBT run rate is already there just purely at the time of merger per quarter. Now the question is, how do we make it 500 over the next few quarters?
Yes. Okay. I think that's it from my side. Thank you and best of luck.
Thank you. Before we take the next question, I would like to remind participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. We take the next question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Thank you, sir, for taking my question. So, number one, I think earlier our strategic direction was to also do away with these two listed companies and kind of try to merge them together. So, is it confirmed that that plan is not anymore valid now?
Yes, our focus is to continue running the asset management company. And you can see under the current set of regulations and the RBI's direction, and if you will go back, you will see me having repeated time and time that it is subject to regulatory approvals. We do not, at this point in time, see any change in the regulatory direction. And this is based on some action RBI has taken recently on other similar structures. So, yes, the answer is a definite conclusion that we will continue to focus and run and build the AMC. And we hope that the regulator, as it goes along, looks at different structures, the structural inefficiencies, and we may find different solutions at that point in time.
Understood, sir. In fact, there was this recent business standard report on the front page which was saying that RBI, in fact, is toying up with the idea of having a financial holding company which will have direct holding with other businesses in financial services as well as the bank, which is what I think IDFC Financial Holding Company has in a way, and that also...
Correct. So we are already there. So, since we are talking, but just having a financial holding company in between with no other businesses, that is in the at IDFC Ltd, actually doesn't cause any leakage for us. So this whole earlier strategy was based on a fact that we should be able to do a complete collapse. Then only the shares could move directly to the shareholders. So, this financial holding company, if the direction goes towards financial holding company, our current strategy still stands. The two businesses which will generate value for shareholder will be the part of the financial holding company, which is the bank and AMC. The other businesses were more wholesale in nature. So if you look at the group businesses, infrastructure debt fund, purely an infrastructure play and wholesale in nature. Institutional broking, the word institutional says it all, it was not retail. And then the private equity and real estate fund and infrastructure equity-oriented investments. So if once we divest from that, what is left is a bank which is focused on retail, as we just spoke, moving from 30% retail to 70% retail, and liabilities in the retail side, and the other business is AMC, which is also focused on retail collection of and servicing almost now 8 lakhs plus customers. And so that's the idea. And yes, if only a holding company is required, then IDFC Limited will become that holding company or financial holding company. But you see, it is very difficult, and I don't think so it's a good strategy to second guess the regulator. And let's see where it moves. We will focus on building value. And whatever value gets created, we will ensure that it is transferred to the shareholder in the most tax compliant and tax effective manner. And first proof of that will happen in the next 10 to 12 months. I hope after you have got cash in your hand, nobody will doubt our intention and execution ability to say that we deliver what we say.
Understood, sir. And, sir, secondly, this 1,200 crores that you are mentioning, now you said this is 1,200 crores in the hands of shareholders. So this is the net amount that the shareholders will get. What is the gross amount against this? How much is the leakage in terms of, maybe a DDT or tax on capital gains, etc.?
Well, see, that gets into too granular an issue. You can come and we can discuss it. It is a subject matter which has a few differences of opinion, but we are quite confident of that. Otherwise, I would not have shared it so openly. But more workings, more math behind it is something which you are most welcome. Anybody is welcome to come and discuss.
Okay. And thirdly, sir, for IDFC AMC, now a lot of AMCs do get a lot of benefit because having a sister concern in the form of banking enterprise. So would IDFC AMC get any special benefits because we also have a bank with us?
Well, we should get the same benefit as any other institution. So, yes, but it's an open platform. The bank will sell the right kind of products which they believe is so as the bank expands, yes, there should be another distribution. So, but we do treat both businesses at arm's length, which is what our philosophy has been. And the bank should take its independent decision of selling products. And similar to, as long as we are making good products and servicing the client, whether we access that client through the bank network, which is the IDFC bank network, or through IFAs or through X and Y, we are neutral to it. But inherently, the brand rub-off should happen.
Understood, sir. I was just thinking, compared to, let's say, an ICICI bank holding ICICI AMC, against here, the linkages seem to be weaker.
No, the corporate structure should not have any impact on the quantum of sales. Both are independent and as per regulations also the bank, let's take whatever bank you mentioned, it is an open platform and they do, other banks also sell other products also, otherwise we would be nowhere out there. Vishal, you want to add something to it?
Not much, Sunil, except what you mentioned, which is we are engaged with the bank as a service provider, much as we are with most other retail banks who offer wealth management products. And as the bank grows, we'll certainly look to see how we can partner with them and grow with them.
Understood, sir. Sir, now coming to IDFC Bank, I think looking at the presentation of the bank as well as what you have indicated here, there are two concerns which I have. One is that, the CASA growth has been much lesser than satisfactory given the stage at which we are, the scale at which we are. In fact, current account has actually fallen, and even the SA growth, last 2-3 quarters, I don't think, it is satisfactory. That is number one. Second, on the cost side, I think we are really shooting up very high in terms of our personal cost and our personal cost. It looks like going on another tangent altogether and is not commiserate with the revenue growth that the bank is having.
So I can comment on both of them, and I think that should be the last question from your side, as if others may have, but it is for the benefit of everybody, and therefore hence I will answer both these questions. Now on the CASA side, you see, the merger has just happened, so we should not, and during the merger, it's difficult, the businesses it's the start of the journey, so that is the baseline which we should be looking at. The retail there is a slide which talks of CASA and retail deposits. So just to answer your question, let me give you a specific thing. If as soon as the merger happened, the new management has announced 7% on savings account, anything 2 lakhs and above, and digital. The way we are building is that there are some digital modifications in the app which allows you to transfer money at the flick of your finger. Okay, so the focus has shifted, the pricing has been changed, and initial benefits have also started coming through in the last few days, and so it's been just a month. So I'm saying the journey of shifting and focusing on CASA and retail deposit has just begun. Thodi patience rakhiye, you will start seeing the results of this change in focus. However, if you look at what we focus on, we're not only focusing on CASA, and I agree with you 200%. Yes, CASA is very important, and obviously branches and therefore the corresponding costs also come through. But the CASA plus retail deposits, which is that has moved up almost 20-odd% quarter on quarter, and this is the quarter where the merger was happening. And the fact that you are seeing a bump up in the operating expenses, which you said is going off in a different tangent, yes, it is very much the focus we have seen. There are one-off merger-related expenses. So I'm saying, please don't read anything significant in the first quarter, in the October to December quarter. It is the quarter when a merger has happened. A lot of things are coming through. I think the best way to interpret the direction would be the first quarter of January, calendar quarter, and the last quarter, 19. Give the new management 2 quarters before we form any view on how they have been able to perform. I don't believe we have just completed the merger. Everything has happened. It's a big task. The integration is still in progress, and the new management is very passionate, very focused, and we are all, as board as well as key shareholders of the bank, focused on seeing how the strategy plays out. But one should not be too quick to draw any conclusion one way or the other. And that's my answer. So your OPEX bump up I am aware of significant one-off merger-related expenses, and the CASA story, the change in focus is just started, and you should see the benefits of that over the next few quarters.
Thank you. We take the next question from the line of Harshit Shah from Individual Investor. Please go ahead.
Thanks for the opportunity. First thing I want to know, in the current financial year, there were some provisions which are made in IDFC Bank's book. Due to this, I think this financial year we won't be making significant profits in the bank level. So is it fair to assume that in the coming financial year we won't be getting a dividend income from the bank side?
That is correct. It's not only the profits, the fact that there is this one-off significant goodwill adjustment, and that is what we did, the goodwill adjustment, so that we could get dividends next year onwards. As per regulation, if we had goodwill on our books, then as per Banking Regulation Act 15, we could not have given dividends even if we had profits. So yes, your conclusion that the dividend income from the bank for this fiscal would not be available. But having said that, I just shared with you that through other processes of divestment, we should be able to make up more than whatever we could have got from the dividend income. And next fiscal onwards, the bank dividend should start flowing.
Okay. And the second question is this 1,200 crores. Just want to understand what does it include? Does it include IDFC Securities, IDFC Alternatives, and IDFC IDF? Does it include everything, or there is some more cash flow which is going to come after this 10 months?
No, it includes everything, including some dividend from the asset management company.
So all 100% stakes which we were having in all these three businesses has been calculated in this 1200 crores.
That is correct. We had 81% stake in the IDF.
Okay. Thank you. That's from my side.
Thank you. We take the next question from the line of Manjeet Barwa from Solidarity Investment. Please go ahead.
Hi, sir. This is Manjeet Boaria. I had just one question. Are there any royalty agreements between IDFC Limited and IDFC Bank and IDFC AMC? Like, I just wanted to understand if there's any royalty flow.
No.
Okay. Thank you, sir.
Thank you very much. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments.
Thank you very much. I think these questions were important, and I hope all those on the call and beyond were able to get clear answers. We will have the next call at an appropriate time, most likely next quarter, because it is a full fiscal year. But because of change in accounting standards, etc., it may not happen exactly in April. It may be sometime in May before we meet again. Thank you very much, and look forward to a productive call next time. Thank you.
Thank you very much, ladies and